I guess y'all fools don't know why some good rappers can't sell no tapes. It's not the company's fault.
Yeah, what's up, YouTube fam? It's your boy Crypto Blood, and welcome to another episode of My Two Satoshis. It is March 19th, 2018, and yes, we have seen a recovery. We were underwater for a minute, but we were saved by the bell. We're gonna get into that in a second. I want to give a shout out first to Rax Mouse. He said he wanted me to play some top tier hip hop tunes, and he said this one is definitely one of them. Too Short in the Trunk. So that's what we rocking out to today, people. Hope you guys are doing well. And yes, we are back above water. We almost drowned, people, but we didn't. We made it out. We made it out. Life jacket was thrown to us, and we swam to shore. So let's go ahead and take a look at the market cap really quickly. We're sitting at $329 billion. Bitcoin's dominance is up pretty significantly, 44.2%. And huge gains, double-digit percentage gains in a lot of these, 30%, 15%. Ripple up 22%. Whack. Bitcoin Cash, Litecoin's up, Cardano's up 38%. These are huge jumps. I'm seeing a lot of 30%. That's huge, man. 42%. So we're up, people. We are back in the game, and I'm going to show you why. I told you guys in my last actual video that I went over the charts. I said if we stayed underwater here, basically I was calling this being underwater. If we stayed under here for, 8, 12, 24 hours, I was really thinking like 12 hours or more, I was saying it was over. We were going to head lower. However, we only stayed under, if you want to count this down, this first candle, you can say roughly 6 hours. And then we shot up, went almost parabolic. I wouldn't call it parabolic though. I was talking to Truth Blitz about this. It looks that way, but this move from here to here was only about 5%. But from here to here, we're moving up, so we're another 6 or 7%. So roughly, like I said, we're currently up 15%. So what we need to see, guys, and I've told you guys this, we're right there pretty much. See these double bottoms? We got to get clear. We got to clear this area, because that's still an area of resistance for us, because as you see, that the red line is showing where our current price is in the markets, and we need to get higher than that. So if we can see a break back above, really 9,200 is still the target for us. But if we can get above this area, which is pretty much translates into these two areas, this is the area we need to get above, and you see we're struggling with that. So I think with this huge move up, the momentum that we had, I think we're going to end up blowing through that. And the next goal is then 9,200 to 9,600 range is where we need to score the next point, which is basically these areas I've circled right here. So that's kind of where we are in the markets. We went underwater for 6 hours or so, but got back above it. All right, there we go, people. Today we're going to talk about these ICOs, and I had a conversation with John App last night about ICOs and what tail risks I see. And I told him, I said, man, honestly, any ICO that's in the US, you're gonna have some tail risk. You're carrying tail risk with holding those ICOs that reside within the US, because they're coming at us big time. So that's something you should keep in mind when looking at different ICOs. and investing in different tokens, even ones that have already ICO'd and are just tokens now. Keep that in mind. So this article here out of CoinDesk talks about ICOs, and the title of it says ICOs iced. A 12-month freeze on U.S. token trading may just be beginning. So let's take a look at what's going on with this. It says here, the market is being chilled. Issued by Mark Limpris, Chief Legal and Risk Officer at Coinbase. The statement captures the mood of the moment for crypto innovators in the U.S. as regulatory uncertainty and months of wanting market growth appear to be finally coming to a head. Spurring the shift is that the SEC finally confirmed last week what had been long rumored, that it's investigating companies and startups associated with initial coin offerings. In response, entrepreneurs are largely surrendering on the idea new cryptocurrencies created and sold to investors could be considered so-called utility tokens, a term denoted a digital commodity meant to represent the share of a blockchain protocol. Still, U.S. companies preparing to issue tokens as securities may not have an easier time reaching buyers. There is no registered broker-dealer capable of trading security tokens in the U.S. yet. And as multiple founders pointed out to CoinDesk, as issuers shift to issuing these tokens under Regulation D exemption, most are still under the 12-month lockup requirement required by the rules. At the MIT Bitcoin Expo this weekend, the issue was on display in a panel that struck a sour note on the state of ICOs. There, Nick Ayton, CEO of blockchain funding platform Chainstarter, went so far as to predict U.S. regulators will view every token as a security. And I've said this before. I had a conversation. I'm not going to say his name, but a guy that had a fairly big ICO last year, and we both admitted, like, yeah, I mean, come on, man. These tokens, call them utility tokens, call them whatever you want, but they're equities, Now, to me, that doesn't mean that they're securities, but to me, that doesn't mean that I think the SEC and all these fraudulent agencies need to come in and protect the investor. I'm not saying that. I'm just saying that they definitely are a vehicle for raising capital for a company. In return, you can use these tokens in whatever, hybrid way. We have a new way of using these equities or these securities, but it's still, at the end of the day, it's a form of raising capital. And they're going to come in and get them, I'm telling you. And it's unfortunate because I still don't believe that that's the way it should be, especially in this decentralized type of economy that we're building. But that's what they're going to attempt to do. And I think it'll be easy for companies to circumvent this by just moving to other countries and doing these token ICO raises and token sales. But it says here, the death of the utility token. Stepping back, the market disarray perhaps shouldn't be surprising. The SEC decree on a little-known ICO called Moonchi in December should have landed like a bomb, but it has rather had a delayed reaction. Its shockwave not really hitting the industry until rumors began circulating that the SEC had issued a wave of subpoenas earlier this month. With Moonchi, what the federal regulators think of as a utility token and not a security token is so small, and the eye of the needle got even smaller, Clayman said. So that's I'm going to leave a link so you guys can read the full article, but you can see that the landscape for ICOs are changing. and not in favor of the little guy. Of course, why would they? We shouldn't even expect that. However, to follow up that article, I do want to show you guys another article out of CoinDesk that kind of ties into it, and it refers to these airdrops that companies are starting to do to try to get around ICOs. So innovation, whenever you have regulation, people find a way to innovate around it. So it's just really pointless. So long ICOs, it says here. Hello airdrops. The free token giveaway craze is here. So imagine getting $1,000 just for joining a newsletter. Well, that's effectively what happened for those that subscribed to on-chain's mailing list earlier on in the project's lifecycle. The company, which is building a disrupted network or distributed network design to connect real-world institutions, gave 1,000 of its ONT tokens to people who signed up to receive its emails prior to certain date. Those crypto tokens were distributed early this month and are now trading for a little over $1 per coin, according to CoinMarketCap. As you may have noticed, there was no sale involved. So this is interesting because this may be the future, guys. So just you want to keep an eye on how these airdrops are happening. I remember back in the day when I first got into crypto, they were doing stuff like this, similar to this. They were more so for the coins, for the tokens. They were really more for the coins. We didn't have tokens then, but they were called like faucets. So you have faucets and stuff like that, pre-mining and all of that. But this kind of reminds me of those days. So Van Scravens comment speaks to a broader trend among token issuers. More are raising the money they need in private initial coin offerings and then skipping the public sale for what's being called an airdrop. Effectively, there are just tokens given to broader interested community members. So it says here, as a non-accredited investor, it is proven to be very difficult to find public sales to participate in until the tokens are traded on an exchange. Whereas the idea around public sales was that the people who bought in are those that understand the platform's value and will promote the token. Airdrops look to accomplish a similar goal, yet expecting that if people hold tokens, they'll be more interested in seeing the network and the token's price grow and promote the platform just the same. So the final area in this article talks about tokens, and it says here, tokens away. According to Jung Wangsek, CEO of Omizigo, the company pioneered the airdrop concept on Ethereum in August of last year after announcing it would airdrop its OMG tokens to every wallet that held more than 0.1 ETH. It says here, Omizigo decided to conduct an airdrop to raise awareness about the project, but the CEO spoke to a broader benefit of the distribution model written in an email to CoinDesk via a spokesperson. The real value of Ethereum projects doing airdrops to ETH or all ETH holders is that it's a crypto economy or economic mechanism designed to incentivize Ethereum project communities to maintain alignment with the entire Ethereum community. The OMG token price has since been volatile, but it has traded or trended up overall. Firewall USA, it says, the final area in this article, says here, that said, issuers in the US are still skittish about doing airdrops to promote platforms. Stream, a blockchain-based video streaming platform, has delayed its airdrop indefinitely because of concerns that airdrops could be used, could be a violation of securities law. Man, listen, I can't stand it, people. The innovation is being stifled within the United States, all because of regulation, all because they want to hold all the profits and all the benefits from first mover advantages in these new startups. They want to ring fence them to accredited investors. How is allowing only accredited investors, people that have net worths of $1 million or more, $250,000 in revenue a year, how is that protecting the small people? I don't understand it. So let me know your thoughts on that, people. I think this is a bad move for U.S. regulators, and all it will do is make these companies go elsewhere. That's all that will happen. So I don't know. You guys let me know. I'll leave the link to these in the description of this video. I'll pin it to the top. And you guys let me know what your thoughts are on this topic. It's sad, in my opinion. U.S. boy, I tell you, it's your boy Crypto Blood. I'm out. Holla.
So your punks can't join, it ain't pop. It's called underground rap from Oakland, California, and the shit sounds